So China just released a new artificial intelligence, and it just had a huge effect on the US stock market and even crypto.
The release of DeepSeek AI from a Chinese company should be a wake-up call for our industries that we need to be laser focused on competing to win.
China's latest AI breakthrough has leapfrogged the world.
I think we should take the development out of China very, very seriously.
A game-changing move that does not come from OpenAI, Google, or Meta.
There is a new model that has all of the valley buzzing.
But from a Chinese lab called DeepSeek.
It's opened a lot of eyes of like what is actually happening in AI in China.
What took Google and OpenAI years and hundreds of millions of dollars to build, DeepSeek says took it just 2 months and less than $6 million.
Now, this is not just another tech gadget or a new meme coin, it's something so much more powerful. Mark Andreessen, who's one of the most respected names in venture capital, said it's one of the most amazing things he's ever seen, and it's now available for everyone to use. So what is it and what can it do?
A newly unveiled, free, open source AI model that beats some of the most powerful ones on the market. But it wasn't a new launch from OpenAI or model announcement from Anthropic. This one was built in the East by a Chinese research lab called DeepSeek.
And it turns out its capabilities are pretty mind-blowing. Imagine an AI that can build entire video games from scratch, even if it has to use programming language it wasn't originally trained on. It can do that. Imagine an AI that can extract just the reasoning from complex data sets to solve problems with super sharp precision. It can do that. Imagine an AI that thinks in real time, adapting to new information as it comes in while telling you its logic. It can do that. An AI that can also scrape data from YouTube channels to analyze trends and potentially predict what's going to go viral next. And it can do that too. So the next phase will be feeding these systems with practical, physical data. And I'm talking about robots. Actual robots doing things and learning how to build and create, which will be the next leg of this race. But I'd love to hear your thoughts. Thank you so much for watching. I hope you have a wonderful rest of your day. Smash the like button, subscribe if you haven't already. I'd love to see you back here next week. I'll see you soon. Bye-bye.
What's up, you Graham? It's here, guys, and I hope you're prepared for what's about to happen in 2025. Despite the market rallying on a Trump election, tariff delays, and a variety of executive orders soon going into effect, as of a few hours ago, the Federal Reserve once again decided to pause any interest rate cuts for the foreseeable future. Except this time, there's no going back. For instance, Jerome Powell has just signaled that they intend to keep interest rates higher for longer, putting him on a potential collision course with Trump. Experts are now warning that the AI bubble could soon be over, and lately there are more and more warnings about the mother of all bubbles popping, with market euphoria and speculation going absolutely wild. So with some rather significant changes soon going into effect, we gotta discuss exactly what's happening, how a Trump economy is going to affect 2025, the impact this is likely to have on everything from stocks to real estate to cryptocurrency, and then most importantly, how you could use this information to either make or save yourselves as much money as possible. Or DeepSeek completely collapses the artificial intelligence premium pricing in the market, causing stocks to begin selling off into the abyss. But then again, what do I know? This is why I'm playing it optimistically cautious. Like, I'm still keeping an emergency fund on the sidelines just in case, but I'm still buying in on a regular basis and continuing to invest, and that way I don't miss out on any of the upside. As an example of this, just take the research from the Wealth of Common Sense blog. They found that historically, over a 20-year term, everything so far has been profitable, and over a 30-year term, the market has not returned less than 8% a year. On top of that, they've also found that since the 1950s, we have spent less and less time in a recession or a bear market. So that's just a little piece of information to keep at the back of your mind. Essentially, everything that's happening today is somewhat of uncharted territory, and that's why it's always a good idea to save as much money as you can, continue investing as normal through the ups and the downs, and no matter what, hit the like button and subscribe if you have not done that already. So with that said, thank you so much for watching. It really means a lot, and until next time.
Hey everybody, welcome back to Whiteboard Finance. In today's video, we're going to be talking about how DeepSeek is hammering U.S. stocks. So is this a big Chinese psyop? Is this market news real? Well, we're going to dive into it right now. So DeepSeek is hammering U.S. stocks. So what is DeepSeek? So this is a Chinese AI startup founded in 2023 by Liang Wenfeng. It develops open source AI models, and this app articulates its reasoning before delivering a response. So that's kind of its big differentiator between OpenAI and Meta and Gemini. And it does this for a fraction of the cost, and we'll get into this later in the video. It's kind of the whole point of the video. But let's take a look at what some analysts are saying. So you basically have the DeepSeek sell-off. JP Morgan is suggesting that the AI investment cycle might be overhyped. DeepSeek's efficiency could lead to a more efficient future. This guy from Jefferies is saying that two strategies post DeepSeek: continue investing in computing power or focus on efficiency, potentially reducing 2026 AI capital expenditures. Then you have contrasting views. You have efficiency and costs. You have market dynamics. I'm not going to read every single one of these. You can just pause the screen and read it. But then also I wanted to read this one tweet of a contrarian viewpoint. So this gentleman on X, he goes, DeepSeek, I'm not buying it. Yes, they have a great model, but the cost just doesn't add up. You can't even buy a beachfront home in California for $6 million, but the trustworthy CCP built a better language learning model than Meta for that price. China has a long history of lying about technological advancements, so it wouldn't surprise me if this was the latest example of CCP trying to act like they're ahead of the world. Am I denying that it can be done for cheaper than what I'm seeing right now? No, it probably can, but this is not new information. Zuckerberg and Sundar both admitted to overspending on AI, and then he keeps going into the, this bear case or why China may be lying. So my thoughts, I don't have any thoughts. I just know that there is a big sell-off this morning. The reason for making this video is to make you aware of this. This reminds me, I'm not old enough to remember the dot-com bubble. I'm 37. That was when I was a little kid. I was riding bikes and selling Pokemon cards. But I do remember 07, 08, and I do remember a lot of different booms and busts. I'm not going to compare this to like SPACs or Nikola or fake technology of 2020, 2021. But there is, I don't want to say a bubble because this could be world changing, but I don't have enough knowledge to be a subject matter expert on AI. I'm just bringing awareness to you because I do think that the market in general is just overheated and a lot of stuff is very expensive. If you look at the S&P 500, it's basically just being propped up by the Magnificent Seven for a couple years now. So just be cognizant of that. I don't own any of these stocks individually, but I do have a majority of my net worth in something like a total stock market fund. So anything that can deflate these top 7 stocks is going to affect you in one way or another. So take a look at this, do a little bit deeper research, but I just try to highlight as many important points as I could in this short video. Thank you so much for watching and have a prosperous day.
First, we're taking a look at Apple as the tech giant's first quarter results just now hitting the wires. And let's get you those numbers. EPS first quarter, $2.40. That's versus expectations of $2.35. Revenue, $124.3 billion versus expectations of $124.1 billion. So beats there on the bottom and the top for Apple. Revenue did jump about 4%. Gross margins do hang in there, 46.9%. The street was closer to 46.56. If you go through the segments here, Julie, iPhone clocks in $69.14 billion.
I also think we have to put the stock move in perspective here. The stock was up 30% last year, remember. It actually hit a record high the day after Christmas, December 26th, and since then it's down about 8% or so. So it's still trading relatively close to a record high. You know, when coming into this report, it had dipped and then climbed a little bit. So people were maybe looking for a not worst case scenario for these numbers. And the numbers are,
good.
eh.
Thank you.